I'm Arielle. I'm product lead France for Stripe. Really excited to be here today to talk about non-fintechs, easily develop new revenue streams with payments. So at Stripe, our product and partnerships team partner closely with SaaS platforms in order that are actually quite diverse, from startups to market leaders. And our goal is really to help them grow and diversify their business by making payments a core part of their offering. In the past 13 years, we've partnered pretty closely with more than 13,000 SaaS platforms, leading SaaS platforms in the world. And those platforms actually serve more than 8 million businesses globally. This actually gave us a front row seat to witness the rise of the platform economy and its transformative impact on global commerce. Just last year, we've seen 76 different platforms, each facilitating more than $1 billion in payments volume. So the growth we've witnessed is actually incredible. And 75% of those platforms serve customers here in Europe. And some of them, like the leading platforms like Shopify, actually have now the majority of their revenue that comes from payments revenue. So in today's session, we'll tap into the insights that we've gathered working with more than 13,000 of the leading platforms in the world. Some of them that you might recognize here, some of them that are actually based in France and that serve customers here in Europe and in France. After that, I'll be super happy to be joined by one of the Stripe users, Upflow, who will actually share how they're pioneering new approaches to embed payments within their core product offering and how they partner with Stripe to drive growth. So let's dive in. The first opportunity that you have as a platform is to launch your embedded payments business. Did you know that you can actually offer an embedded payment service to your customers? This is really something that can bring you a lot of value because you can actually grow your payments revenue by adding this new offering in your core offering in your business. And so adding embedded payments can help you do 3 different things: reduce churn, increase and improve a better seamless user experience, and increase the monetization potential of each of your customers. So some research from McKinsey shows that by 2026, 30% of all economic activity will actually flow through software platforms. This is already enormous. But here in Europe, driven by the growing desire to have a better frictionless experience, this adoption is accelerating even faster. So focused it to grow 18 to 21% annually to reach 33% by 2026. And we've seen a lot of leading platforms do that here in France. So I want to talk to you about a Stripe user, Planity, which is a great example of that. So I don't know if you're familiar with them, but Planity is a booking platform for wellness and beauty salons. It connects millions of people that need a haircut to thousands of beauty salons all around Europe. And so Planity wanted to improve their proposition and create an end-to-end platform for salons. So very quickly, it became critical for them, for their success, to have a seamless payment experience. So Planity decided to launch a white-labeled payments platform with Stripe. This payment platform was actually a service for salons so that they can do a variety of different services. Of course, managing bookings and appointments, sending appointment reminders for salons, but also accept payment in person. And it was really interesting for them because any new customer on Planity could actually accept payment from day one thanks to that. And the salons themselves didn't have to find separately a different payment service provider because they only had to use Planity payment service, which was really making life easier for them. So that really is a great example of how you can acquire more customers and create stickiness by embedding payments into your platform. The second opportunity is to meet consumer preferences through payments. Here, the idea is that, okay, you can launch an embedded payments service within your business, but actually you can even design a payment experience that will meet the consumer preferences so that you can increase conversion, increase stickiness, and unlock new monetization potential and the lifetime value of your customers. And platforms today are laser focused on listening to the needs of the customers and creating that kind of payment experiences. So here we have a very good example as well to illustrate that, which is Hello Asso, which is a platform for fundraising so that people can actually donate to charities online or offline. And so Hello Asso actually saw very quickly the rapid change in how donors will want to donate money. And so this shift actually was from traditional online payments to mobile contactless payments on the go. And so Hello Asso wanted to respond to that customer need. So they made it possible for charity fundraisers to accept payments directly from their phone through tap to pay. So directly from an iPhone in their hand, nothing else than that, supported by Stripe Terminal SDK. So this is really a great example of that. And Hello Asso, using Stripe, also increased their conversion by 25% using the different suite of Stripe products. This leads me to the third opportunity, which is to grow your payments revenue. Because of course, you can launch an embedded payment service in order to increase the percentage of your total revenue that will actually be through payments. But you can also increase the monetization and the profitability of each payment transaction. And for that, I'm super happy to hear from Upflow, which is one of the Stripe users. So I welcome Côme Chevallier, who's payment director at Upflow, and who will share more about this.
Thank you for the invitation. Great to be here.
It's really great to have you. So thank you, Côme, for being here. I know that embedded payments is critical for you and part of your strategy. I'm curious to know how you started to think about monetization and what was your approach at the time around embedded payments?
Sure. So for a little bit of context around Upflow, I'm sure most of us have learned painfully one day that a sale is not a sale unless it's billed and collected, so you actually get the cash. And Upflow helps B2B companies get paid faster and easier by streamlining their collections processes to also provide at the same time a delightful customer payment experience to their own customers. How we do that is we natively integrate with the billing softwares, accounting softwares, ERPs, and we handle the part of what is usually called the order to cash cycle between the invoice issuance and its actual payments. So payments is a very obvious area for us to work on, because it's part of our core value proposition, which is to accelerate payments and turn the payment experience for B2B businesses into a delightful one. So the way we've approached this since the beginning is we like to think in terms of maturity stages, both for us and for our customers. So at the very beginning, it's great to think about getting paid online, optimizing the payment mix, etc. But at the very basics, you need to ensure you have a very tight process. And first understand who owes you what and what you need to do. So we started there and then built some product functionality around, okay, now that your data is actionable, within Upflow, imported from your billing and ERP's systems, now that you have the tools to rally all the teams around the collections processes and turn it into a meaningful, delightful experience, how can you make it easier for your customers to pay you? And a lot of our own customer base mostly gets paid offline, via wire. Some checks in the US. It seems a bit crazy to us here, but that's just how it is. And we really believe that B2B payments is going to witness a revolution like B2C payments have over the past 15 years. And we want to build the product and the functionality to help our customers be at the forefront of this evolution with their own customers. So we've been thinking about it since basically day one.
Yeah, and I think this is of course an example of a fintech, but as the other examples we shared about Planity, which is for hairdressers, or LOSO, which is for charity fundraisers, there's almost always a good reason to embed payments, because it creates that stickiness.
Yeah, I agree. It may feel a bit more obvious for us just because of the nature of the business, in that order to cash cycle. But the way we've approached this, and this is especially true, we think in B2B, is that payments is not only about the payments, it's about the larger workflow that surrounds the payment. So for example, you mentioned Planity. It's not just about processing the payment, from the customer who's booking. It's also offering a simple, straightforward booking experience, reminders, ability to reschedule, ability to split the payments in two parts, pay on-site versus pay online. All of those options are what we sometimes say ourselves earns you the right to handle the payment flow for your customers, and then monetize it afterwards in what makes sense for your business. It's also true for marketplaces, for example, or other types of businesses where you capture a payment and then split it across different payees. So you got one payers, multiple payees. You've got different ways you want to route it. Sometimes you keep funds sequestered for some time, and you need the technology and the know-how to do that. And this is, I think, where Stripe was particularly useful for us. We have a fairly straightforward use case, but the ability to rely on strong technology and distribution as well was key for us, because more than half of our business is in the US and Canada. We have customers pretty much on every continent, so this is very key for us.
That's super interesting. You mentioned how you work with Stripe. Just for those who don't know, Stripe Connect is a programmable infrastructure that enables any company to become a platform or marketplace. And I'm curious to know, how did you manage working with Stripe Connect, and how do you approach onboarding specifically of your new customers?
Yeah, so we actually did not start with the Stripe Connect version that we have today, which is allowing us to monetize payments. We started with the the Stripe standard integration, which is basically available to anyone. And I think it ties back into how you can create payment monetization streams for your business. The way we started is going back to that maturity stage with our customers. we started with no way to pay online, via Upflow for our customers, because we thought the first problem is, okay, let's help you get a very streamlined process where you can, regularly chase your customers for payments in an efficient and delightful way, and help you organize that, which in most companies still happens in Excels and email threads or Slack threads in a pretty disorganized fashion. So in Upflow, for every customer that you will contact through us, we generate a payment portal for you. And at the very beginning, there was only basically wire and checks information on that. And gradually, we had customers who were either using Stripe, typically for a self-serve product next to their enterprise business or another product line, or their main product line, actually. And some of them wanted to reuse their existing Stripe account on the Upflow portal to capture online payments from customers that they had never captured online payment before, from only getting paid online for big amounts, etc. We also had other of our customers who wanted to offer that option, who had no online payments, but were already like forward thinking in terms of, okay, how do I move a part of my base online, because it just helps me get the money faster. It's more convenient. My customers actually want to pay me online, and I want to ride that wave, essentially. So we started to offer an integration with Stripe via our portal for those use cases. And it was very useful for us as well, because it allowed us to test very quickly if there was appetite and adoption in our customers, for online payments via Upflow. And the answer over time became a very obvious yes. So we had now market proof that there was, traction on that front, and that's where we started to wonder, okay, how can we now monetize this for Upflow? Because very obviously we're offering something that people want, and it was very easy to test thanks, to Stripe's technology. And so we started to explore those options. Again, we were quite satisfied to discover that it was very easy to do with another of Stripe's product, which is their Connect product, where we can basically now rely on Stripe's infrastructure for the compliance, the security, the actual money movement, and payments processing. But we now manage the payment flow, meaning we basically build on top of Stripe's infrastructure a whole slew of new functionalities that are useful for our merchants. Now that we know and have the proof that this is something that they wanted to use with their customers. So if you're thinking about potentially trying to monetize or trying to find ideas to create payment flow monetization, my advice would be twofold. The first one is try to focus on where you can create value in a broader workflow with your customers, not just where payments is a part of it, but you're actually solving an end-to-end problem for them. I can give one example of that for Upflow, because then by doing that, you will earn the right to handle and monetize their payment flow. And then the second one is try to focus on shipping something very fast so you can test appetite. Don't do like a 12-month RFP on who's the best platform with the best rates or whatever. None of that matters unless you actually have usage. And that was super useful for us to use, Stripe Connect, because the speed to market was extremely fast, So, and that really matters, especially when you're, a startup versus a very well-established player. So yeah.
Can you maybe just give a few examples of like services you built on top of that in your business?
Yeah, I can give two examples. The first one is there was a bit of, I don't know if it's friction or reluctance from some of our customers to deploy specifically card payments versus direct debits as an online payment method with their own customers because of the cost. it's a few percent, depends on the countries, 2, 3-ish, sometimes it can be a bit more, to accept card payments. Most of it is actually interbank, payments, which is an incompressible cost basis. And some of our customers were like, okay, it's cost me a bit too much, especially the ones that have low margins. If you sell a SaaS at 95% gross margin, okay, maybe you can absorb a bit of that cost. It becomes a bit harder when you are lower margin. And so we built into Upflow cost-sharing tools so that our customers could share part of the cost of accepting card payments to alleviate some of that burden. So you can wonder, okay, why, as myself a payer, would I want to pay more, for the service that I purchased just because I want to pay by card? Well, actually, it's because this is very convenient. It's very fast. Maybe my company has a card program. It's super easy for me to spin off, a card and make the purchase now. Some of them have corporate programs, rewards. They get cash back. They get incentives, to spend on a specific instrument. But overall, it's just more convenient and just easier, than executing a wire, sending a check. Take 4 weeks. It's the wrong address, so it takes another 4 weeks, to reach. And then it just pollutes, and the customer relationship distracts from, using your products, etc. So that's one thing that we've built into the product, cost-sharing tool to alleviate the cost of accepting cards for our customers. The adoption is massive, especially in the US, a little bit in Europe as well, but in Europe the behaviors are a bit different. We lean a bit more towards direct debit instead of cards, but we see things shifting a bit. So this should become quite relevant in the future. A second one that we've built around it is around syncing back the data into the ERP. So when you process online payments, then you got to understand, okay, in what ultimately arrives on my bank account, how many payments were there, that were received, to which invoices they correspond, to which customer. Then you have to separate, okay, how many processing fees did I pay? If you're using the feature that I just described, how much cost did I pass on to my customers? Because all of those go into different parts of your accounting. Some of it is business expense, some of them is potentially additional revenue. You've got to account for all of that in your systems as a finance team and as an accounting team. And that creates a lot of admin overhead and burden when you start processing 100, 200, 500, 1,000 payments per month. So we have built two-way integrations between Upflow and the billing and accounting systems and ERPs so that we completely automate that process for our customers. Because that was another friction to adopting online payments is, it's going to add a lot of work, on my end to, register that in my accounting, and that's very true, and that's exactly why we've built it. So now what we're seeing is that we are migrating customers who had existing online payments flow, elsewhere with other payments processor, into Upflow, and also onboarding new payment flow from customers who wanted to deploy online payments but did not know really how to start, where to start, or just couldn't get over the admin burden that this would involve. And because we did things like that, shipped functionalities like that, which also, by the way, demonstrates a deep understanding of the problems you're a person to have, so it generates a lot of trust. Then we enable them to take the leap and enable online payments via Upflow, which we can then monetize. So that would be my main piece of advice, is to look into those two areas. And in pretty much, as you said, in pretty much every business, there is some area like that you can develop into.
Yeah, I think the main message today is if you're a platform, how can I actually go beyond the typical SaaS subscription revenue and start capturing payments revenue too? I'm just curious, you mentioned before the US notably, so we were discussing before about how we can meet consumer preferences, and this is very true for different countries in the world, but also even for us. A few years ago, I I wouldn't have left home without my wallet in my bag today. I'm very happy to go out only with Apple Pay on my phone, which I really like. So in the different countries where you want to expand, you have those kind of different cultures, payment habits, etc. So how do you think about expanding into new countries? How do you manage that today?
So the general thinking about this is that you want to meet customers where they are and enable them to use whichever payment rails or methods that they want to use to ensure, all of this is fluid. So typically, as you mentioned, in different geographies, there's different systems. Typically, cards is pretty well distributed worldwide, but you've got different card networks. You've got Visa, Amex, MasterCard, you've got Discover, you've got JCB, you've got like
Carte bancaire in France.
Exactly, carte bancaire. So you got a lot of different networks. And it's very important that you're able to accept like all of those with low failure rates, etc., which typically technology like Stripes can provide. And then you've got more local payment methods. So in Europe we've got SEPA for direct debit. In the US it's ACH. Canada PADS. UK it's BACS, etc. There's local schemes, and it's very important to ensure that you offer the maximum number of options to your customers or to them to offer to their own customers through your product, because you never know, what the individual preferences are going to be. You said you now use Apple Pay. I think a lot of us do, or Google Pay or equivalent. But sometimes I don't know, your phone ran out of battery, so you need to use your contactless card, or you're gonna Venmo a friend, or you're gonna do something like that. So all of that happens because you have all those options. So that's also what we tell our own customers via Upflow who distribute online payments. We're like, hey, by default, try to activate every payment method to every customer, because then you maximize the surface. Worst case, they keep paying you offline, and that's fine, but in 100% of cases, there's been a meaningful amount that has transitioned online. So I think regardless of what your business is, if you can try to find where you can anchor around the payment experience and develop features for your customers that are valuable, and test those rapidly, and then learn from other experiences in the payments world that what really matters is reliability, the ability to deploy a maximum amount of payment methods wherever you can, and have a very flexible platform. You're in a pretty good place to be able to monetize payment flow. And just to give you a simple figure, we started monetizing the payment flow a few months ago, and it's already close to 15% of the revenue, the entire revenue of Upflow. So things can go very fast, with payments, and it can dramatically change the trajectory of the company. You mentioned Planity, Shopify. There are other examples of companies that started as a SaaS and then actually became, a payments company where the SaaS is the main vehicle to distribute the actual, the biggest part of their revenue generation, which is around payments. So yeah. Definitely something to consider.
Yeah, that's really massive, more than 50%. Definitely something to think about, for sure. I'm also curious, since you're now payments director at Upflow, not all of companies have a payments director, and you're a pretty long-term employee in the company. So I'm curious to know, how did it happen? At what time did you think it was the right time in terms of organization to have a payments director, and how it's fitting in your strategy?
So it started to make sense from the moment where we decided, okay, we now have proof that there is demand for payments functionality as we have, built them and iterated through, and now we want to monetize that flow. So that's where we kind of made sense for us, because it essentially becomes a new product line. So that was about at that time that we took that decision. But honestly, we regularly say that we wish we would have started earlier. Honestly, if you look back, all the signs were there, and yeah, we wish we would have made the move sooner. So hopefully, with this talk today, it's gonna give you a few ideas to go back into your own products and with your teams and try to see if there's something that can be done quickly, because yeah, again, we wish we would have started earlier. So hopefully you can do better than us.
That's good to hear, because like a lot of the times at Stripe, we talk to users who start to think about payments and actually have that kind of aha moment of like, oh, actually this should be definitely part of the company strategy. It's driving a lot of profitability, etc. So great to hear that you're at that point. I'm curious maybe to know, now that you have that kind of organization, how, like, to what extent this is today core of your strategy as a business and part of the company's vision?
It's at the very core and has been since the beginning. As a matter of fact, it's been since in the day one in the vision of the company, but at actual day one, we did not yet have market proof that we could build it out into the platform that it is today. We needed to iterate through the maturity stages, as we call them, and first build a product that solved the problem right now, which is, okay, how do I get organized with my collections? Not even with online payments, but just what we have today, because it's really painful and sometimes a bit of a mess in some companies, and can be almost life-threatening to some companies. So we wanted to solve that first, learn, iterate our way through building the best platform for collections, and then gradually add and help our functionality and help our customers be at the forefront of what we think is going to be a real revolution in B2B payments. So it's been there since day one. It's extremely core to our product strategy, and we see the Upflow platform that relies on our core like SaaS with payments, with some other product lines, typically around like financing that we're thinking about, and just expanding into the broader problems of the modern B2B finance teams that we can hopefully solve with our our product and services. So yeah, extremely core.
I hope we gave you that same feeling in the room. Actually, we can open the room to a Q&A for Côme or I. Like, if people have any questions, we have someone that can help and give a mic, so feel free to raise your hand if needed. Don't be shy.
Hold on. Can we get the red mic on? Testing. Oh, good.
Thanks for the presentation. I had a question regarding how do you, so you're using both billing and connect from Stripe, I guess. How do you manage to optimize your business model with your clients regarding the costs you apply to your clients with billing, with connect? And also I had questions more specifically maybe about how's your policy regarding chargebacks, for example, your own chargebacks maybe, and the ones of your clients. Thank you.
Sure. So we ourselves at Upflow do not use Stripe's billing product, but we do use Stripe Connect product to offer our own customers, access to deploying online payments via Upflow very easily. So maybe you can talk a bit more about what actually Stripe Connect is, but yeah, we do use Stripe Connect to enable our users to easily offer online payments to their own customers. And
do you want me to jump in just
yeah,
to say
sure,
what
sure.
it is? And I'll give it back to you. Yeah, so just for you to know, as I said, so it's a programmable infrastructure that enables any company to become a platform or a marketplace. And how it works is that basically you have a platform that has then a number of connected accounts. In your case, it will be your clients. So the companies that are using Upflow are the connected accounts. And then we have different types of connect depending on the rights you want to give your users. So for example, do you want them to have access to a Stripe dashboard to pilot their activity? Or do you want to give more limited access to that? So it's up to the platform to decide that. And the goal is that it's very flexible and that you can also decide on how you want to monetize and manage the fees as a platform.
Mm-hmm. So essentially Connect enables us to work with Stripe to have more control around, for example, the pricing that we have with our own customers, because obviously, we package into the payment solutions for them a bunch of other functionality. Some of them I've described, but there's more. And so this is a programmable infrastructure, as Arielle mentioned, that also allows you to create, new product offerings and product lines on top of, because you have control over the infrastructure and the underlying, cost and agreements with Stripe. So that's been really useful for us as well in terms of market discovery and iteration on how can we price that global payments package. And again, the speed to market using Stripe Connect was extremely key, because you don't want to spend 9 months just to spin up a first MVP. So yeah.
So did you test different pricings for your users and made it evolve with the feedback you got, for instance?
Yes, and especially as we ended up building more functionality in response to some of that, feedback. We also, went into a, discovery process, because in different markets and specifically different geographies, the culture is not the same, the market practice is not the same. You know this better than us. The cost structure is not the same in terms of accepting payments in different geographies. That's why if you head, for example, to Stripe's website, you will see, the pricing in the US public is not the same as in Europe. There's reasons for that underlying. So yeah, it's very iterative, and having the right technical platform to do that is simply critical. So yeah. Is there a part of the question that we didn't answer?
Yeah, sorry. So I already knew Connect. We use Connect too, but the idea was more about how you manage to change or to make your business model evolve with the cost that online payments implies, and how you make your clients accept this new cost from your platform, since they already paid for the service, and how do you add it to the base model?
Yeah, I can actually give you two examples which are building up onto the previous two examples I had mentioned. So for example, we're able to command a pricing that is that you could call at a premium in a way, because we enable, for example, cost sharing abilities, right? Because today, if you accept cards but have zero cost sharing with your customers that they can opt into, then you bear 100% of the cost. But if you are able to pass some of it, then you neutralize, some of it, and that's typically something that we price as a premium, because it's an extremely useful feature that has a direct ROI, for our customers. Another way we price it in terms of feature package is that part where the payments with all the breakdowns of fees, the deposits and all the money movement that is synchronized back into the billing system or the accounting system or the ERP in real time, we price this as a monthly flat fee. And what's really helpful is that with the combo of both, if you're doing some cost sharing, then the monthly fee actually pays for itself, And so that's also a good commercial argument, which is, okay, take that package. You're going to be able to accept online payments, do some cost sharing, which will also kind of pay for your ERP synchronization. So there's a lot of synergies in there, also with other parts of our product that we can really build into and you know, create a lot of value for our customers. So that's two examples of how we can have some levers on pricing, controlling our own cost, and you know, creating cross sells with our other parts of our product.
And I think also just as a platform, you can think about the full lifetime value of your customers, and because you create more like value in your product, because they can accept payments, do a lot of things, increase conversion. So it's really interesting for the customers. And so basically you're going to reduce that churn and have customers that stay on your platform. So they will be much more valuable like in a few years as well, which is something to take into account.
Yeah, I think that's a really great point that we actually didn't touch upon yet is, you know, a customer of your product who is trusting you to handle their payment flow, it's a very, very strong like marker of trust. You know, this is probably the most critical thing for a company, you know, cash flow, cash inflow. So if you're able to do that, you know, that's an extremely positive signal for your retention going forward, and a great marker of trust. So so yeah, it's definitely also for that aspect that you may want to develop those payments flows, is that it really helps you develop your product's value proposition and helps with retention over time in a, you know, dramatic way. So yeah.
Yeah, thank you. I see we're already over time, but thank you so much for joining Côme. And of course, like if you have more questions, we will be upstairs as well. So thank you so much for your attention.
Yeah, thank you for the invite.